Today's warnings from NVIDIA and Caterpillar, as Allison was just saying, we have two new entries in our earnings. Hall of Blame. This is the China gallery. Companies who have blamed China's slowing growth and the trade war for poor results. Now, other entries this season not to be missed include chip makers Texas Instruments and Intel, along with Goodyear and FedEx. They all say China's slowdown hurt their bottom line. And there are more exhibits coming soon in the tech, automobile, food, and luxury sectors. These companies all make a substantial amount of their sales in China. Apple, Qualcomm, McDonald's, and LVMH all report this week. Now, earlier this month, Apple told investors that it was blindsided by the magnitude of the slowdown in China. Joining me now, Scott Wren, as a senior equity strategist at Wells Fargo Investment Institute. Thanks so much for being here, Scott. I mean, this blame game, this story of blame for China, is it real? And do you think it will go on for some time?
Well, you know, Paula, when you look back from time to time, there's always kind of the scapegoat. And certainly China is the scapegoat during earnings season this time. And for us, you know, we're still looking at our economists are still looking for a 6.2, 6.4 type of GDP growth year out of China. So they're in a controlled slowdown. It has been pretty controlled and gradual. You know, they want their consumers to start driving their economy more rather than having to rely on us to buy their stuff. So it makes sense that growth would be a little bit slower. Certainly, though, the stock market has been volatile of late based on trade, which plays into the whole global growth story. And we've certainly seen overall a little bit of a slower story internationally than what we maybe thought we were going to see 6 months ago.
And I'll get to some of what you brought up in a second. I'm glad you used the word scapegoat, not me. But do you worry about that whole China contagion thing? Because, okay, we're going to deal with 6% growth. Some people question whether or not you can really hang your hat on any of those numbers and how accurate they are. But at what point does the Chinese growth news start to really weigh on the global economy, given this is not even 10 years ago, right? The global economy really hangs on a lot of China growth these days.
It really does. Let's face it. They're the second biggest economy in the world. They have, 1.3 plus billion people. A lot of people moving into the middle class. So, China's going to be a story for a long period of time. For us, if you look at global growth, we're somewhere 3.5, somewhere like that, 3.5% GDP, something like that. That's okay. It's about as expected. Probably, the real worry, people should probably really be focused on Europe, because that's where at least we've downgraded our growth there from 1.9 to 1.6. So we're a little bit more worried about Europe than we are China. Emerging markets overall, though, really, if you look at various surprise indexes and these emerging market overall, their data is really coming in largely better than expected. So actually things in many emerging market economies are looking better, and we've been favorable on emerging markets since September, and on a relative basis it's worked out so far. So we like the emerging markets. We think there's some opportunities there. We certainly continue to like the U.S. market, though, as well.
And I've got only one question left, but I still had two on the table here. So I'm going to let you decide which one you answer there. If I take a deeper dive on some of the earnings, again, the blame China story, I actually think margins aren't looking good. I think costs aren't as low as they should be. It may be a little bit of the tariff action, and even, dare I say it, wage inflation starting to creep in. Is that a story, or do you want to talk to me about Jay Powell and the Fed meeting in the middle of the week and how some people believe they could still screw this up?
They are not going to screw it up this week, and we think they're going to pause in March. They're not going to do anything this week. And I'm sorry, your other question is?
Now I don't have time to answer, but I'm going to give you the one. I'm going to give you the one-word question. Are you worried about margins, especially at these valuations, wage inflation, things like that?
12.3%. They're really good margins.
Gotcha, Scott. Thanks so much. Really good. We tidied all that up so
quickly.
Paula. Appreciate it. Thanks, Scott.